Good evening to everyone tuning into the show. Kevin, welcome to the AthenaX podcast.
Thanks for having me, Neil. Excited to be
Hey,
here.
so it's been a while since we last spoke, and I think you had just come back from the Paris Blockchain Week when the last time we had a chat. Has there been any new blockchain events that you've been to since?
I feel like I'm constantly everywhere, which is maybe a side effect of running a global network. To your point, I was just in Europe in Paris, and then next up is Consensus in Miami, and then after that is Stablecoin, EMEA in Amsterdam. I don't know, man. I feel like I live on planes, but I guess I signed myself up for this, so I can't really complain.
Yeah, this is a crazy industry, man. This is one of those things where like everyone's a digital nomad. Even if you do have an office, there's just like so many events happening globally all the time. You just gotta be at every one of them just to stay relevant at this point.
We have customers and participants on our network on every continent. So we are in, the North American conferences, we're in the Latin America conferences, we're at some of the Africa conferences, Europe, Asia. I guess Middle East is a little bit hard to get to at this point, not to get too political. But I had to cancel the trips that I had planned. But hopefully can get back out there at some point soon. It's evening my time, so the office is maybe a little empty behind me. But usually the Borderless office is a little bit more full.
Yeah, it's late for you into the evening, and thank you for taking the time to come on. It's bright and early for us here in Malaysia, so thank you, appreciate you for taking the time to take the call in New York. I know it's late, but yeah, let's get into it, right? So what were you doing before blockchain? Tell us a little bit about that story. How did you get into it? What did you do? Give us some color there.
Yeah. So I got into blockchain personally back in 2014 when I read the Bitcoin white paper and was very interested in the concept of peer-to-peer electronic cash. Was working at the time in healthcare fintech, which was kind of interesting, at a company that did platforms for large health systems. So think about like multi-hospital type health systems in the US and the sort of fintech infrastructure that they would need to better understand the cost of care, to better understand the costs around variable staffing models, to better understand when is the break-even point in replacing equipment like an MRI machine, which is a huge CapEx, versus the amount of downtime that's happening, and how could you use data from other health systems to kind of predict what the degradation would be. And I realized that I absolutely loved fintech, but healthcare in the US was an incredibly depressing vertical to do fintech in. So I started to think about, okay, if healthcare is just like super antiquated from a technology perspective, where would I want to innovate within the fintech landscape? And as many times, I think human nature, the pendulum swung completely the other way. So from like some of the most antiquated systems, which in the US is healthcare, to the cutting edge of like, okay, let's go do fintech within blockchain then. And I was always fascinated by the payments aspect, which is why I like the peer-to-peer electronic cash of Bitcoin. And I think I very quickly realized that despite being a Bitcoin maxi still at heart, it was highly unlikely that Bitcoin were to become the on-chain payments instrument, because I think it's too much of a leap or a change in behavior to introduce both a new technology, i.e. blockchain, and a new asset class, i.e. Bitcoin, versus introducing a new technology, i.e. blockchain, with a familiar asset, i.e. fiat currencies and stablecoins on chain. And then I started to become a stablecoin maxi, and I've been working on stablecoins in their various forms for the past decade now, since 2016, which I like to joke is a very long time to say stablecoin adoption is coming next year. But I think finally that sentence is true. And not only is stablecoin adoption coming next year, but stablecoin adoption is certainly coming this year and has started to come last year as well.
Yeah, stablecoin has just gone parabolic, I would say, in terms of adoption. Right today, it's like a $320 million market cap industry, and I think that's leaps and bounds of where we were in the last 2 to 3 years. And I think a lot of it has to do with exactly what you're doing at Borderless, which is cross-border sort of like transactions. But yeah, let's get into that a little bit. I also caught that you were previously you co-wrote an Ethereum token standard, ERC 1400. Would you say that was the point for you where I gotta go all into stable coins and treasuries and assets and really like dive deep into the fintech, bridging the fintech and blockchain world together?
I think the all-in moment actually came a bit earlier. And that's kind of what led into ERC 1400. So I had the chance to work at one of leading product at one of the infrastructure providers to a company called TrueUSD, which was the first US-based fully reserved stablecoin before USDC was launched. And that experience is what really made me a stablecoin maxi. And from there, it became fairly obvious that if we were going to put currency on chain, the next natural step was to put yield on chain. And yield was most likely going to come, sure, in a DeFi sense from like over collateralized lending and all that stuff. But more interestingly, yield would come from things like T-bills, money market funds, etc. And if we were going to put these securitized assets on chain, then ERC20 wasn't going to cut it, right? ERC20 was too lightweight, if you will. So I was fortunate to get to contribute to ERC 1400, which is the Ethereum token standard for real world assets. And the point was post stablecoins, how do we now bring these T-bills and money market funds and other RWAs on chain, which, if I'm guilty of anything, it's probably being too early in many things in life. So probably 7 years too early with ERC 1400. RWAs, now certainly a great narrative, certainly getting a lot of traction, got a big tailwind from BlackRock launching Biddle, and then you've had Franklin Templeton launching Benji, and you've had all the work that Ondo's doing. So now like very much an active market, less so 7 years ago. But it's exciting to see some of these things now take fruit and start to grow and, be used in the ecosystem as a whole and get to say, I helped.
I think it's so funny that you keep on bringing up this like you're ahead of your time kind of like moments in the industry and what you're doing. I think it's great because it really shows that you've got that sort of strategic mind ahead of you that you bring into the workplace. Do talk to me a little bit about the Mastercard Accelerator that you were in before. As far as I can tell from the outside, it's like a super competitive program. You are one of 5 companies among hundreds of different fintechs. How has that accelerator essentially shaped what you're doing today?
When we think about payment networks, which is effectively what Borderless is, there are let's call it 3. There are 3 payment networks in the world that absolutely dominate. Right, on the bank side, it's Swift. And on the retail side, it's 2 companies called Visa and Mastercard. Right, and these are by far the apex predators in the payments network space. So to be able to, one, be recognized and selected by someone like Mastercard out of what I think is thousands and thousands of applicants, and to be, one of 5 companies in a cohort is very humbling, especially by the people who are the experts in global payments networks that operate in, almost every country on earth and move money at tremendous scale. But the other is that it's also afforded us very, very interesting opportunities to work on some projects with Mastercard. And I don't mean to be like overly cagey, but we are announcing some very exciting things at Money 2020 Europe in a couple months, where Mastercard and Borderless have been building together on what it means to have governance across a stablecoin payments network. And I'm stoked to be very close to getting to talking about that publicly a lot more.
Exciting times indeed. I can only imagine. Mastercard is this massive conglomerate. It's been around for like 70 over years now, maybe even more for all we know, right? But yeah, I think it's super interesting that a startup like yourself is able to work with such a big name. I think it's superior branding from a marketing standpoint, and just having that sort of Mastercard logo affiliated with your brand just opens up so much doors. Let's take a step back on why this even exists, right? So we've talked a lot about yourself. Let's talk a bit about Borderless. What are you guys doing here? Because what exactly is the problem that you're solving with Borderless? Give me some info on that.
What I've always been fascinated by is what I see as the juxtaposition in very much a global asset, which is a stablecoin on a blockchain, and what is locally fragmented, which is regulatory licenses, traditional fiat banking rails, and FX liquidity. And it seems like there's a very obvious need to build some sort of a layer at the intersection of these two things, right? That creates global interoperability between what we think of as on-chain money, i.e. stablecoins, and off-chain money, i.e. funds sitting in bank accounts, bank rails, alternative payment methods, things of that nature. And there's definitely quite a few people that are kind of like tackling this from different positions. Our belief has always been that this needs to be solved by a payment network. And what I mean by a payment network isn't a new blockchain, isn't a new stablecoin, but is rather an orchestration network of locally licensed counterparties in all these different markets. And if you think about the traditional banking analogy, like imagine a world in which banks had to integrate the APIs of every other bank they ever wanted to transact with. That is wildly unscalable. Right. This is why things like Swift exist. This is why things like VisaNet exist. This is why things like Mastercard's network exists, where I can connect to the network and now be instantly connected by the network to all these different dozens and hundreds and thousands of counterparties around the world. That's what Borderless is doing for stablecoins. So if I want to use stablecoins to move money around the world at scale, I no longer need to go and integrate Yellow Card, plus integrate Bitso, plus integrate Bridge, plus integrate someone else, plus someone else, plus someone else, plus someone else, plus someone else. It's insane. Instead, I connect to the Borderless network. The Borderless network is now already connected to all the leading counterparties around the world. And now I can transact with a single connection. And I think today it's 95 countries and 63 local fiat currencies. And of course, quickly growing.
Nice. What's the size of the market, of this particular market for remittances?
It's growing massively quarter over quarter. So it's actually tough to figure out what is the volume that's happening in stablecoins in remittance versus in trading and other use cases. You know, Visa has some research taking a slice at it. A few other folks have some research taking a slice at it. But I think the volume that exists today is almost irrelevant compared to the volume that will exist over time. So we're seeing moves happening, right? We saw Stripe acquiring Bridge for $1.1 billion. We've now seen Mastercard intends to acquire BVNK for $1.8 billion. We're seeing the world's largest payments companies, Stripe, Mastercard, et cetera, that are quickly acquiring stablecoin technology. We're seeing others that are building products that are, doing releases and launches like every quarter, right? Things of like all the work that Visa Crypto is doing in the stablecoin world. We are so early in this market that the volume is still to come. I was on a podcast this morning with my friend Jorgen, who runs digital assets at Euroclear, and he was kind enough to remind me that Euroclear clears the entire world stablecoin market cap every single year. So that gives you some sort of the scale of what happens, and he's a really fun guy. And he was also kind enough to remind me that while stablecoins are a blockchain as a whole, digital assets are a $3 trillion market, Euroclear has added $6 trillion of assets under custody in the past 3 years, which is more than double the entire blockchain market. So the amount of opportunity that exists to be captured is orders and orders of magnitude beyond what exists today. And ultimately with Borderless, that's our focus, right? So we're focused on bringing more institutions on chain. We're focused on enterprise applications. There's plenty of innovation that are happening in early stage companies. Think of all the stablecoin neobanks in emerging markets, things of that nature. We're fortunate to also count a lot of those amongst our customers, and we want to support them just as well. But we think what really turns Borderless into a 10, 20, $30 billion company over the next decade isn't capturing the market as it exists today. It's being the driving force in more and more institutional and enterprise adoption continuing.
That is crazy. Like hearing all these numbers and just like, like there seems to be a consistent trend on two things, right? Like the numbers for remittances are huge, right? These institutions, Euroclear is like doing what the entire stablecoin volume every day is another like brain, like so with this revelation plus you having this like a consistent track record of being ahead of your time, I think wow, it's something really it's something really interesting to take a look at. The question I have in mind right now, is like clearly there is demand coming in from institutions. There's demand coming in from the retail level who need cheaper solutions for cross-border settlement transactions. Why do you think that stable coins are the answer here? You've got different types of in this realm of like remittances. You've got like your QR pays, you've got your RTGSs, you've got your local rails, but and they all essentially do the same thing, right? So why is it that stable coins are such a hot product? that it seems to be the answer for every problem with remittances.
I want to take a step back and let's talk about the history of payments for a minute, because I think that's incredibly important context to what's now happening in the world. And I think about payments in three buckets. Payments 1.0 in my mind is the original correspondent banking network, right? Think of Swift, think of the correspondent banks. This is a network that was born out of financial institutions needing to start to move money between each other and settle around the world as things like global trade started to develop. There became a lot of friction around the settlement mechanism because it's relatively slow and inefficient, right? I think we all know the T+2, T+3, T+7 settlements of the correspondent banking system, where while the Swift message may be instantaneous, the intermediary banks forwarding along funds, the FX conversions, the compliance checks that happen at every hop, et cetera, the reconciliations very much cause a long delay. And that created the opportunity for what I think of as payments 2.0, which is the rise of the fintechs. And there was a tremendous amount of enterprise value that was created by companies like AirwallX, by Neum, by these other fintech giants who created a new user interface on top of the correspondent banking system that gave the illusion of immediate funds transfers, right? So think of a company like Wise. Wise creates the illusion of real-time cross-border transfers by having these pre-funded accounts all over the world. And they take money into one pocket, send it out the other pocket, and look, it looks like an instant transfer, but under the hood, it's the same correspondent banking infrastructure that we've had forever, right? They've just built a treasury management program on top of that, and they've basically wrapped correspondent banking in a fintech wrapper that makes it feel to the consumer as a better product, but it's still reliant on that same infrastructure. What's happening with stablecoins is we're now entering payments 3.0, where this isn't another wrapper around correspondent banking. This is finally a fundamental upgrade to the underlying infrastructure. And we've seen tremendous innovation around local rails. So if you think about the number of real-time payment methods that exist around the world, it's been massively increasing over the past decade. Think about networks like Pix in Brazil, Spay in Mexico, Instant SEPA in the EU, et cetera, et cetera, et cetera. There exist these real-time payment methods now in most geographies, right? For people listening in the US sucks at banking rails. It's like RTP and FedNow don't have, the same amount of adoption as other places. But in most countries, you have real-time payment rails. The challenge is these real-time payment rails don't talk to each other. Meaning if I have a bank account that's connected to Pix in Brazil and you have a bank account that's connected to Instant SEPA in the EU, well, we're both connected to local instant payments methods. There is no way for us to make an instant payment between each other. And what stablecoins are starting to represent is stablecoins become this real-time bridge between these fragmented local real-time rails within geographies. And that's, I think, the fundamental innovation that hasn't been able to happen before. And now you're getting all these optimizations around treasury management, around pre-funding, around the speed of transactions, all those things, because we're not just putting a wrapper on correspondent banking anymore. We're actually creating real-time connections between all these local real-time payment rails.
Wow. Yeah, you're essentially the super connector at this point. Let's go into FinTech 3.0, payments 3.0. Sorry. Yeah, it's the next step forward for payment 2.0. It's got all these benefits and technology to actually connect all of these different payment rails together. But as the market has taught us in its history, right, is that there is no perfect sort of like solution to any problem, right? So you speak a lot to fintechs, PSPs, banks. What is their love-hate relationship when they work with stablecoins?
I think there's two main ones. The first is what they perceive to be an increased level of risk, which is probably fair, and that risk comes in a few forms. The first is certainly regulatory risk. So in the US, we've recently passed the Genius Act. In the EU, we have the MiCA regulations. Brazil just recently passed some new regulations. But in many other markets, stablecoins are still in this kind of gray, undefined zone, whereas correspondent banking has moved trillions of dollars around the world for the past 50, 80 years and is certainly no longer in a gray area in most places around the world. So I think that's certainly very fair. There is also a counterparty risk, which is very different, where you now have counterparty risk on the issuer of the stablecoin, where I think you can commoditize how the reserves are held, and that helps create a lot of trust. So holding it in cash and cash equivalents, having it in a third-party custodian, having those reserves be audited and have like reserves, like these are all ways to build trust. But fundamentally, there is a different counterparty risk in having a financial institution as a counterparty or a bank as a counterparty versus having a stablecoin issuer. And then there's certainly frustrations operationally, having to rebuild the internal processes and tooling. And I think that's a lift that maybe as outsiders, we underestimate, right? The amount of processes, procedures, kind of muscle memory that's been drilled into how to use these legacy systems, and the amount of training that needs to happen internally, especially across enterprise organizations with, hundreds or thousands of people that work in financial operations, to retrain all of them into a blockchain paradigm is a massive, massive, massive undertaking. And I think kind of that risk and this operational retraining are the two biggest friction points still today.
Yeah, it's changing perceptions, changing muscle memory. I think it's probably would be the largest problem for everybody, or even trusting the system, because every day we're pretty much plagued with different types of hacks on the blockchain, and most of the headlines in the news is always about in our industry it's always about something going wrong, and I think a lot of that goes and translates into the adoption of the tech at the enterprise level. And at the same time they don't but at the same time there's also definitely some benefits which they do see, but it's not exactly fully understood by these counterparties here. So all these hackers out there, you're giving us a bad rep to mass adoption.
Stop, please stop.
Okay, let's go a little bit into. I'll get into some sort of a deeper level of compliance later on to the show. But let's take a step back. Let's put the light back on what you guys are doing in the spotlight here. Okay, so I've checked out your blog. You're shipping almost one new product feature every week, and I think that is phenomenal, right? You got to be super focused into to be able to do something like this. Okay, tell us about the latest product feature that you've shipped out.
I think the way that we think about the product in general is we think about it as two layers, and the kind of fundamental core layer is the network of what we call participating financial institutions, or PFIs, that are part of Borderless, right? So think the yellow cards, Bitsos, Bridges, etc. of the world. And we probably spend about half of our resources continuing to grow the amount of providers that are part of our network. We've got a few exciting announcements coming up there. And then the other thing that we think about is, as you scale beyond a single provider and you move into a whole network of providers, that brings with it a ton of complexity. That's complexity around operations, right? Meaning, how do I now reconcile across all these different providers, and how do I have a single source of truth? It's complexity around compliance. So how do I orchestrate the same onboarding, but now into a bunch of different counterparties, and understand where am I approved, where am I not approved, what's missing, things like that. And it's also complexity around things like RFIs, right? So when I get a request from information, if I only have a single counterparty, that's really straightforward. If I all of a sudden have a dozen counterparties, now is this a dozen different Slack channels, a dozen different email threads? Kind of how do I do all those things? So a lot of what we've been shipping recently is these operational and compliance efficiencies, which we kind of call our payments hub. And you can think of the payments hub as the platform that sits on top of the network, which is how you actually access and transact with the network. So we recently released reconciliation automation tools. We've released some stuff that's coming up around RFI consolidation. We've released a bunch of stuff around compliance orchestration. And kind of the last component that we're now thinking about is, how do we bring more insights from the network into our clients? And what I mean by this is that we have a superset of transaction activity than any particular person, right? Because if you're transacting through Borderless sees not just your transactions, but also every single other person's transactions. And what we're trying to figure out is, how do we use all this transactional data to bring actionable insights to everybody to help them improve their payments flows? So one of the things that we can do, as a great example, is we can do execution benchmarking, which means if you are building your own provider connections outside of Borderless, you're getting some sort of an FX rate back on your stablecoin to fiat conversions, and you have no way of knowing how competitive those FX rates are. Are you getting good rates? Are you getting screwed? What's the context around this? You have absolutely no idea. Borderless sees dozens and dozens of different customers executing hundreds and thousands of FX transactions for the same fiat currency pair. And, certainly from like a privacy standpoint, I'm not going to go tell you, hey, Neil, Kevin's executing at X. But what I can do is I can anonymize and aggregate a bunch of that information. So I can tell you, hey, we see executions between X and Y, and here's where you fall, right? And think of like a used car site that tells you, oh, this is a great deal, this is an average deal, this is a bad deal. We can start to provide those sorts of insights back into our customers. And we can also do these things around the reliability of providers, because now we're seeing way more transaction activity. So this is kind of like the insights layer that we're now thinking about as kind of the final leg of the stool. And I think this is where a ton of value gets derived, where the more transactions that happen on the network, the more data exists. The more data that exists, the more insights can be mined from that data, which can then be fed back to the network participants to produce better transactions, which produces more data, which can be mined for better insights, which can be fed back in. And this starts this really, really interesting flywheel where if you're not transacting through Borderless, now you're missing out on all these insights. And for everybody that is part of the network, every transaction that they put through the network helps improve their next transaction. And that makes every single network participant more valuable.
Wow. Like a lot of the answers which I'm hearing right now, one thing I've noticed, right, is that these solutions and concepts that you're bringing to the table requires, excuse me for being so forthcoming, it requires a lot of brain power. Like you've got to be like really anal about certain things, about like going really deep into the problem and thinking it from like the front, the back, left and right, sideways, diagonally, all that kind of stuff, right? And it's making me think about, when you as the founder, you're building out your team. How do you build your team to solve these problems? Is there a certain type of person that you need, that you would want to hire when you're building this project out so deeply and very quickly? How big? Well, let's start with how big is your team first.
I think there's two things that are really important to us. One is we have an extreme bias towards builders. Everybody on the team is a builder in some way, shape, or form. And I think that's what it takes, especially in early stage companies, to actually ship products that are impactful. And to kind of answer your other question, I think one of the things that we've done incredibly well is that we are a very, very small team. We don't fill roles for the sake of filling roles. We keep an incredibly high bar, and we are trying to collect the world's brightest people around this area to coalesce around the single problem. And I would much rather have a role be vacant than have a role filled by the wrong person. And that's let us keep a small, incredibly high performing team that, as you said, is shipping basically on a weekly basis at this point.
Yeah, nice. So how big's your team? 12 people?
12.
Wow. And 12 people to manage like what, 60 over 60 countries? Sorry, over 90 countries and 60 different currencies? That's crazy. That's like really efficient. You can sleep.
I mean, it's 10:30 and I'm sitting in the office, right? About half the team is in New York, about half the team is not. So we kind of have global coverage from that
Nice.
standpoint.
I see. Well, makes sense to have a global team, and I mean you have to at this point as well. Any chance you're hiring?
We are thinking about how we want to scale BD right now. That is the next kind of batch of hires that we will make is on the go-to-market and on the BD side. And we haven't quite put our strategy together around who we're looking for and where we're looking for them. But that's going to be kind of the next batch of roles. And generally, like, we don't spend a lot of our time recruiting. We don't have open job posts and things of that nature. We challenge people to find their way in versus us reaching out. And that's helped us find the incredibly driven and talented folks who are on our team today.
Nice. That's kind of like the reverse, right? That's kind of like the reverse of how most companies do it. And yeah, I think having someone look for you as the other way around, it just makes it a lot more special for both parties. Because like for you guys to even connect, you have to understand each other at an ethos level first before moving on to your into the rest. And I think that's a pretty solid strategy at this stage. Yeah. And let's talk about BDs and what you're looking for with the BDs. We also we spoke a little bit about how some institutions are a bit hesitant on picking up the technology, or maybe they're just like not as well informed. Is that the reason why you're hiring BDs, to fill that role of sort of like an advocate for you?
Yeah, I think for us, BD is much more of a solutioning exercise than it is anything else. When we think about the end customers that we serve, and the reason I refer to them as end customers is because we are embedded in a lot of different products. That's kind of our general go-to-market strategy. Is we're very rarely going after kind of fintechs or corporates or others directly. We're very much kind of like white labeled and embedded into the existing infrastructure layer that then goes and hunts for those people. But the kind of the end customers that we look at serving, are folks like Sony and Samsung and MoneyGram and IBM and like some of the largest companies and institutions on earth. And it's not about saying, hey, here's a 5-minute demo and here's a sign up link, right? That's not what the BD process looks like. It is much more about understanding at an incredibly nuanced level what the pain points are within these organizations, and then being able to build a plan together on how stablecoins can alleviate some of those pain points and how you can mitigate a lot of the associated risks of using a stablecoin. Right, it's like a super simple example. A lot of the reliability in stablecoin providers is not where it needs to be. So the easiest way to mitigate that risk is to make sure that you have 2 or 3 providers in all of your key markets. That way you can fail over if you need to. So we spend a lot of time kind of doing these sorts of exercises with companies. And it's not about selling Borderless, right? It's about figuring out how they can leverage stablecoins. And once we can figure out how they can leverage stablecoins, inevitably with the infrastructure and the product that we have, it makes all the sense in the world for them to do that through us.
Like the institutions who are looking at Borderless, right? When they're toying the idea of accepting stablecoins, but they're not quite ready yet, how could they take the step forward to essentially enable themselves to be prepared for the incoming of stablecoins?
I think the first thing they've got to define is really what they want to use as a use case, develop some sort of a POC around. And then once you have that general use case or that general problem that you're looking to solve, then you can define what a stablecoin stack looks like. Because a stablecoin stack isn't just a single company, unless you're consuming some sort of like a black box that's completely at arm's length, which is where some people are starting. And then they're starting to realize, wait a minute, this is becoming a more and more important part of my business. And now I want to start to own the stablecoin stack versus having it be completely outsourced to some third party. And when you want to start to own the stablecoin stack, that's where Borderless comes in as the fastest and most intelligent way to own a stablecoin provider network internally. And there's a lot of things that we don't do, right? So we're not a wallet provider, we're not a custody provider. We don't provide, compliance things around transaction monitoring or things of that nature. So what you really want to do is kind of define that stack, right? Of like, okay, I'm going to need some sort of a wallet provider. I'm going to need some sort of a on and off ramp provider network, which is Borderless. I'm going to need some sort of a compliance layer, which could be a Chainalysis, a TRM Labs, et cetera, et cetera. And you kind of go through the stack and define what you need, and then how you configure those things to go and satisfy the use case.
Gotcha. After dealing with so many different parties and situations and just like building out Borderless for like 2 years plus now, how?
Yeah, we turned to April 1st. So
congratulations. Happy belated birthday, I guess.
Thank you. Thank you.
What are some of the things that, that has changed your perspective on the industry or the problems that you look at when you first started building Borderless to today?
I honestly think the biggest surprise that we've had is how immature the market still is. And it's immature, I think, from still a regulatory and a risk perspective. And it's also honestly quite immature from a technology perspective, which is a really big surprise to me. We connect to kind of the leading and largest stablecoin on and off ramp providers in the world, all over the world. And I don't want to necessarily put anybody on blast because they're great partners and customers of ours. But we've had some of these largest providers in the world tell us, hey, like our sandbox doesn't support any of these flows, just go test in production. which is kind of unheard of in a regulated financial repayments environment, to just like go test things in production with real funds and real compliance overhead and things of that nature, versus like really building and testing, robust integration within a sandbox environment and then going live. We see API docs all the time that have functionality that doesn't actually exist. We talk to BD folks all the time that oversell capabilities by 2x or 3x or other things like that. And some of those things, exist in every market, but especially in stablecoins. I think I've been very, very surprised by how young a lot of the infrastructure and a lot of these providers still are, despite their size, despite their brand, despite, kind of these other things. And there's a certain level of enterprise and institutional quality that we want to have within Borderless. So we've been spending a lot of our resources kind of filling these gaps where we can. And I just didn't expect to have to invest that much into filling gaps of these, giant stablecoin leaders.
We've touched a lot on protecting, developing the core business, talking about like perceptions of the industry. I want to go a little bit deeper into your attention of securing that bag, that big, hairy, audacious goal. You alluded to it in the start, but I just want to bring it up again. What is the dragon that you're working on slaying in 2026?
We have some very interesting enterprise customers that we want to launch on the network this year. I think that's by far the biggest focus. And then, we really want to strengthen the network across GCC and across APAC. So we're going to be spending a lot of time towards the end of the year in Asia. And we feel like the network is really, really strong across Latin America. We feel like it's really strong across Africa. We feel like it's pretty strong across the US and the EU, but it's still in its early stages across the Middle East and across parts of Asia. So that's really where we're focused from a network expansion standpoint. And there's so many stablecoin funds flows that are very APAC centric, as you know well, being in Malaysia. So I think I am going to be spending a lot more time in your neck of the woods in the second half of the year. And we want to make sure that the robustness of the network, that exists within LATAM and Africa, the network's just as robust going into Hong Kong and mainland and Southeast Asia and Korea and Japan and some of these other places. So we can't do everything all at the same time. I wish that we could. So we've been kind of slowly going, towards the east. And we're now arriving into a focus of the.
I mean, we welcome you all the time with the biggest, with like the biggest of arms, right? Like this is one thing like the Asian market loves. It's value. And like if you can deliver the best sort of experience and product with the least amount of resources, I think you'll do very well in this market here. So we are approaching the end of the show. I want to ask you two questions. The first one is: do you think there could be a future where stablecoins, for whatever reason, does not find a future as the answer for as the answer for payments 3.0?
I think at this point, it is highly unlikely that stablecoins are not the answer. But as with anything new, there is certainly a systemic risk. Crazy conspiracy theory, if it turns out that Lazarus Group and North Korea are actually Satoshi, as an example, probably doesn't bode well for anything blockchain related. Yes, stablecoins are very much different from Bitcoin, but I don't know that any digital asset would survive that kind of a market shock. But, at this point, I think for stablecoins to not be payments 3.0, it would need to be some sort of an absolutely massive black swan event. Otherwise, it's pretty inevitable.
So stablecoins are coming. It's just a matter of time at this point. And yeah, I'm fully on board with that. It's something which I'm gonna tell like my parents, my uncles, my aunties, like hey guys, it's coming. You gotta get prepared. If I were you, so Kevin,
buy your tether. It's gonna go to $10 a token. No, just don't.
But Kevin, like, what is the best way that people who want to get involved with you, what is the best way that they can reach you, find you, and just get connected?
X is always great. I'm at KEVLEHT, first part of my first name and last name, on X. That's a great spot to reach me. For those that are looking to better understand stablecoin cross-border payments, We also publish a ton of research on what we call the Borderless Insights, which is on borderless.xyz. That's where we do our stablecoin FX research that we put out. That's where we put out a lot of concepts like, what does it mean to be the stablecoin skyscanner? What is the history of payments 1.0, 2.0, 3.0? That's coming out at the end of the month. I actually wrote a lot more about that. So that's a great place to just kind of get up to speed. And, all those resources we just put out for free.
Nice. Excellent. Well, Kevin, this has been a great conversation. I hope it was the same for you. For me, at least, it was. It's really it's really deep expertise at this point for remittances, and finding out that there actually is a blockchain solution at an enterprise level at this scale, I think I think you're a great beacon for the industry of like what is really possible for developers out there in the market. And
Thank you.
and yeah, so thank you for coming on, and to all the listeners and our viewers, thanks for tuning in to this episode of the AthenaX show, and I will catch you on the next one.